How's it going, guys? Today I'm going to quickly go over technical analysis and how I use it to pick my entries and exits on stocks, and I'm going to use an example of a trade that I recently just entered just to give you further insight on what I do. So we're going to get to this video on technical analysis right after this. I'd also like to mention that trading is never a perfect game. I mean that you aren't looking to pinpoint the exact prices in the short term. It's just not going to happen. What you need to be looking for are zones, levels, or any form of support that you, other traders, and big institutions can easily see, and use that as a start. And for those of you who have used technical analysis before, you would know that sometimes it doesn't work out for you, but does that necessarily mean that you're wrong? The problem with retail traders like us is that we get so caught up in the now with the very little money we have, and we immediately look to get out when things go wrong. So here on the chart, I'm going to show you where sometimes this level doesn't work out and you get caught in what traders call drawdown, or where your net equity for the moment is negative. So here is SPXL, or one of the leveraged indices that mimics the S&P but is highly leveraged, so this could be a dangerous trade if you were to buy too many shares of it. And here I drew a line. I'm going to put it right here. It's sort of a guesstimate. Again, it's not like a pinpoint thing. Like I said, it's just a zone or a reference to look at. So we got a bounce here and we got another one here, but right here, what do we see? Price broke through. Now this is when the little guys like us get scared and get out, cut our losses. But this is also where institutions buy in, and they make all the money because they realize something. It's not about lines, support lines, or resistance lines. It's about where the money flows. It could hit a support line and institutions sell off, leaving us in the red for the day. And that has happened before. Trading is a gamble and a risk, but in order to make money in life, I do believe that you need to take risks, whether that's trading, athletics, acting, or anything else in life. So being the intelligent trader that you are, you would not let a slight dip destroy your hopes and abandon the trade entirely. So we turned a loss of 7% and we turned it into a profit of 23%, ideally if you sold at the top, but you see what I mean. It's a psychological process that we have to start getting used to, but once you become accustomed to it, trading isn't all that stressful anymore. Here is an example of a trade that I actually made, and I did it on IIPR, so let's take a look at this trade. Here I saw a pretty big sell-off within the past 4 or 5 days of trading, and I noticed a semi-strong support level, and I realized that it was unlikely to see a major bounce back from previous levels. So I thought I'd try to make a quick trade. On July 24th, which was this green candle, I waited to start seeing some green. And once I saw this, I started buying in at an average of $99.67. During that day, IIPR broke 100 again, so the trade was looking good, and by the 29th, which is this day, I believe, yes, it had reached 107.62 so about a 9% gain on that trade, and I was pretty happy with that. Here is another example on the same stock that is still in the process of being traded. So in other words, I'm still in this trade, but when I saw the price touch this key level again, I bought in, but I bought very little. Then look where the price went. Another bad sell-off at the end of August, but I stuck to my original thesis for getting in, and I waited for the price to reach its 200-day moving average, which by the way is this red line here, and I bought some more, so I'm currently up on this trade. So what I'm trying to drive home is that it's not about being exactly right 100% of the time. You can be profitable as well as being wrong on the quote-unquote correct entry. At the end of the day, you're trying to make money. You're not trying to follow simple indicators in the stock market. If you think there is a way to easily trade stocks and make money, you're wrong. I'm sorry, but it's just simply not the case. Yes, you are going to lose trades. It's all part of your growth and your development as a trader. Even the big guys mess up at some point. It's not a perfect world, so don't expect these candles to react perfectly on the charts. Once you master that psychology, you will become a better trader, and that I can guarantee. Well, that's it for today's video. I hope it was helpful. Please hit that like and or subscribe button. It would really mean a lot that you guys are supporting my channel. But either way, thank you for watching me, and I will catch you all next time on Frank's Trades.